Good morning all, camelbacktrading.org coming to you this Tuesday morning, September 8th. Welcome back. Hope you had a very nice weekend. You are looking at the market profile of the SPY ETF here on Window Trader. And a couple things. We are starting the last third of this year. I think it's going to be a really exciting and volatile time. So for those of you who all watch my videos, thank you very much. If you're not subscribed, hit subscribe. I mean, I'm giving you, I think, some very valuable information for free. So why don't you subscribe to it and watch them each morning and afternoon. If you like what you see, please hit the like button. Give me comments, what you like, what you don't like. If you don't like something, instead of hitting the dislike button, tell me why you don't like it. Anybody and everybody could use a little constructive criticism. And more important than anything else, if you like what you see, go to my website, the link's on there, and join the trading room. I mean, if you think this is valuable information for $20 a month, you get a play-by-play on what this market is doing as it forms each and every day. Okay, so we're all over the map from last night to this morning. Right now, with about an hour 10 to go prior to the opening, we're at our lows in the triple Qs. We're at our lows basically, well, we're definitely at our lows in the SPY and the ES. Remember, if this was long-term selling, they would not have let this market do what it did on Friday and rally 8 points. So again, I think it's still short-term sellers that are in control, at least for now. That could certainly change. And they're seeking a level, right? These algos, these quant programs, they're set to very visual levels. There was not much to lean on. That's why I said I would use I's low as an afternoon pullback and L's high as an afternoon rally high, even though they're not true meanings of those, true definitions of what those are. But the algos need something to lean on. And look today, they're just all over the place now. The next thing they're searching for right now is yesterday's low, as we are trading at our low for the pre-market. So, as far as destinations, right now for the upside, if we do not gap high, lower, and there's a chance of that, right? We still have over an hour to go. We're only $2 below Friday's low. If we gap lower, it would be Friday's low of 334.87, which, by the way, would be another weekly low taken out, right? We said once you stop the one-time framing up in the weekly, it starts getting the intermediate time frame involved. It starts weakening the overall structure as they start repairing the poor structure that's been underneath this market. So if we gap lower, 334.87 would be your first destination. Then until we get more market-generated information, we wouldn't have anything until today's pre-market high of 343.58. Then you had the afternoon rally high that I used, 345.40 in L period, and then 347.83, which was Friday's high, and then you should have all the single prints from September 3rd. For the downside, right now, our pre-market low is 336.65. Then we have Friday's low of 334.87, weekly low. Then we have 332.01. That's the other weekly low that I think we should get to at some point. Then some very, very visual areas. 331.13 daily low, filling another daily gap at 330.06. That's a 107-point gap from August 5th. 327.86 daily low. And then the real big ones. We have 327.73. which is a monthly low, filling a gap at 327.23. That's a 50-point gap from the 3rd. And then 327.73 monthly low again, filling a weekly gap, right? The second of our weekly gaps at 326.63. That's a 110-point gap from August 3rd. So what's the game plan for this morning? Well, plain and simple, we will be bouncing all over the place. If in the next hour we are to gap lower, then I would absolutely look to take a put play, right? And I would use C's low as my out, right? If we gap low, I'll look to take a put. So since Friday's low is 334.87, I would be playing today's expiration. They do have expirations today since we were closed yesterday. I'd be looking to play the 335 puts if we gap lower. If the gap fills, I'm out of that trade because remember, we're going to be all over the map with these algorithms until they set at least their initial balance. If you don't fill the gap, if we have one, well, then you stay with the trade because my next destination, right, would be my pre-market low, which right now is 336.65, and then we don't have anything until that 332.01 weekly low. Another put play, we don't gap lower. We open at the lower end, then we start trading below value and take out Friday's low. Again, I would take a put play, and again, I would stay short unless we come back into Friday's range. Now, call play, again, you can take one if you were to trade lower towards Friday's low, but I would certainly be out if we take it out. Again, that's not the greatest trade in the world because you would have at least overlap into lower value. Right now, I am in, I think, 10 or 12 tick increments. Let me see. I'm in 12 tick increments right now, so they look a lot closer than they are. I did that just to put the entire profile on my screen. So that is a call play you can take. I don't know if I would take that one. Again, if you do, Friday's low is 334.87. You could take either 335 or 334 call out if you take that out. If you open in the next hour in the middle here, in the middle of this chop by the POC, I would do absolutely nothing and wait for more market-generated information. We are going to start getting some pretty good volatility over the next 4 months. So you don't have to jump in right away on every trade. All right, something really keep in mind. And then the triple Qs quickly, look, they're closer to gap and lower. So if you trade the NQ, you trade the triple Qs, same thing would hold. If they gap low, I would take a put play out. If the gap gets filled, there would be no call play at this time in the triple Qs. And then chart-wise, again, today's the 8th. Month really just started. We're one time framing up 5 months. That is healthy. Yes, we're inside last month's range. The big one, and right now, we closed above it on Friday. We're inside of it, is February's high of 339.08. Now, it's only September 8th. You would like to see them close at the end of this month above 339.08. If not, a couple of things. Number one, you'd be back inside this huge 7-month balance. And number two, the odds of taking out last month's low get better and better. And then you'd certainly be back in firmly in balance because then the one-time framing up would have stopped. Weekly, wild week as you can see. We did not have an outside week down. We had a chance for it, did not. Question is, do we at least have an inside day possibly, if not an inside week? If you take out this week's low fairly early, well, then the seller's a little more powerful than possibly I gave them credit for, at least initially. Right? Same on the daily. The daily, I have it as down. Monthly's up, weekly's balanced, daily's down. So the next big level, by the way, if we do take out Friday's low, the 50-day moving average, which we haven't seen in a while, is at the round, I'm just going to round it out around the 320, 330 level for now. So that would be a very visual spot. I do believe, whether it's today, whether it's this week, next week, I do think we will test at least the 330 level, the 50-day moving average, and then I think the very visual monthly and weekly gap levels, right? You have the monthly gap that gets filled at 327.23. Here's the weekly gap that gets filled at 326.63. This is going to be a very visual level, I think, in the coming days and weeks. Remains to be seen how far they want to take it down. Good luck trading today. Have a great day, and we'll recap at 4 p.m.